Oh my god, Tesla stock is dropping, it's crashing, finally it's happening, all the bears are right, Tesla's going to zero. And I'm sorry guys, I really am, I'm telling you guys, I'm going all into Tesla stock. It looks like it's not, working out. I have to sell everything, I have to sell every single share I have, and I'm gonna go ahead and buy Nikola stock and Ford stock because that's where it's at, that's the future. I'm so sorry guys, rip Tesla, man. How could I be so naive? How could I be so dumb, man? Nikola, let's go make that truck of yours. Alright guys, let's get one thing straight, alright? I am never, ever going to sell my Tesla stocks. Because, well, if you watch my channel, you already know why I'm never ever gonna sell my Tesla stock. It's the stock to own for the decade. What other stock out there that's gonna give you the growth and the return that Tesla's gonna give you in the long term? I'm not talking about tomorrow. No, I'm talking about the next 5 to 10, 15, 20 years. Originally, I had another video set up for today, but because I got endless flippin' comments about, Tesla PE is too high, it's gonna crash down 50%, even to 100%, going down to zero. That's it, RIP Tesla, it's finished, no longer it's gonna be the leading EV, or it's just a fraud company. Like, come on, I don't know. I got so many bears on my comments, it's absolutely hilarious. So in today's quick video, I'm gonna go over what the stock price would be in the ultra bearish case, because when you guys watching me, some of the bears watching me, they go like, wow man, you're way too bullish, even though I think I'm being conservative. But anyways, let's become bearish today and let's see what happens. Now obviously bearish doesn't mean the stock's gonna go to zero. That's really not possible at this point. No stock is at this point. Not even Nikola. So what makes you think that Tesla's gonna go to zero? Come on man, let's be realistic. And in this video, we're gonna be realistic. Realistic bearish, not stupid bearish. And yes guys, I'm still going all in into Tesla stock for your information. All right, let's go. Smash that like button. Let's go. So as you guys can see right now, this is the quarterly chart, stock price chart prediction for Tesla. And yes, it's quarterly because, man, I'm not a day trader. I'm not buying this stock today to sell it tomorrow. I'm buying today, accumulating today. So by at least 2030, I can probably do something with that pile of cash. Maybe not. Maybe I'll keep it in there until 2035, 2040 because, Tesla's gonna continue to innovate. I keep saying this in my videos, man. By 2030, Tesla's profit and revenue will not solely be based on vehicles and full self-driving. By 2030, we will see Tesla as an AI company, not as a car company. But again, most of you bears don't see it that way. You just see, oh,
it's a car company. 80% of all the revenue and profits are coming from the car company.
The problem with that statement is that you're looking at Tesla stock in the short, maximum in the medium term. You're not looking at it in the long term, which you should be. Tesla has mentioned over and over and over again that by 2030 or 2035, Tesla Energy will be the same size as their vehicle business. That should tell you something. But anywho, let's not get carried away on that. Let's just focus here. Quarterly basis, because again, I'm not a day trader. And it's really hard to see what the stock price will be tomorrow, the day after, and yada, yada, yada. At the end of the day, the long term is a weighing machine, short term is a voting machine. But anyways, as you guys can see in Q1 and Q2, these are actual delivery numbers. In Q3 and Q4, we gotta figure out. Now, I've already figured this out or guessed out what the delivery numbers will be for Q3 and Q4. You guys can check it out here if you guys haven't. But in Q3, we figured out that they most likely will deliver 381,861 vehicles. And that's gonna be our bull case here. We're not gonna go any higher than this number. We're just gonna come down from this number. So putting this number in, with an average vehicle sold of $57,000, so every vehicle they sell, it's an average cost of $57,000, which most likely is gonna be a lot more than that thanks to the EV credit, but keeping it conservative, we get a total Q1 revenue of almost $22.5 billion and a net income percentage at 18%. Now 18% was at Q1. Q1, if you guys look at 3.3 billion out of almost a 19 billion revenue they did, that comes down to about 18%. Now in Q3, we're saying they're gonna do 380,000, a record number. The net income should be 20%, not 18%. But anyways, let's keep it conservative because I'm a conservative guy. 18%, we get a net income of over $4.3 billion. Now let's go ahead and find the PE to find the stock price. For the PE, I usually put 90 PE for Q3 because right now we're over 100 PE. So most likely when they destroy earnings, PE is gonna shrink. So with 90 PE, we get a stock price of 348 bucks per share and a market cap over $1.1 trillion. Okay, fine, market environment is terrible. Most likely 90 PE is not gonna happen. Let's bring it down to the base case of 80 PE, 310 bucks per share. Right now the stock price is at 270, 275. So in about month time, or from October 21st to January 20th, the average could be for the base case is around mid to low $300. But that's the base case. Let's look at the bear case. I'm gonna go as low as 70 PE, man. 70 PE is the low. I don't see 70 PE below 70 PE this year at all. But let's see, 70 PE, stock price of 271 bucks per share, which the stock price is now. And that's the bear case. That's the bear case. I don't see it going below 70 PE. Man, look at Amazon. They've missed earnings for the past couple quarters and they're still at a 60 PE. Tesla, they're projected to grow massively, at least for the next 3 to 5 years. Why would they be trading at a 70 PE now? It doesn't make sense. So I'm saying 271 bucks per share as the bear case for Q3 after this record earnings come out, this record delivery comes out. I mean, come on. Now let's go back to the 80 PE for the base case just to show you guys something. In Q2, with a PE of 102 was 310 bucks per share. With a PE of 80 for Q3 was 310 bucks per share. It's a lower PE, but the stock price is 1. Why is that? Well, that's because they're crushing earnings. When they crush earnings and they go above and beyond what everyone is expecting them to do, it shrinks the PE. It's always been like that. The only thing that sucks about here is the market cap is a lot more than it was in Q2, even though it's the exact same stock price. The reason for that is because the shares outstanding. I put a 1% dilution rate, or 1% shares outstanding being sold every quarter. It makes sense for the market cap to increase while the stock price is staying the same. That's normal. But hopefully in the next couple of years or next year, they can do a buyback program and they can stop diluting. That'd be awesome. So let's take the base case or the 80 PE for Q3 as like the average, 310. For Q3 from 21st of October to the 20th of January. I think that's okay. Mind you guys, I just noticed that the FSD price is increased, but I didn't increase it here. So you already know it's conservative on top of conservative, man. Come on. Now, moving on to Q4. For Q4, I predicted that they're going to do about 467,794 vehicles delivered. And I decreased their average vehicle sales by 1,000 to 56,000 because hopefully Q4 supply chain issues will be, fixed. It'll be more smooth. It'll be more in motion. No more hiccups, hopefully, so they can reduce the price. Again, this is not including EV credits either. So with that, we get a record Q1 revenue of over $27 billion and a net income, and I put here 20%. Even though it should be 22 or 23% here, I kept it 20% because I am conservative, and we get over almost $5.8 billion net income. That's absolutely insane. And check this out, the total revenue for the last 4 quarters, which is literally the whole year of 2022, is over $85 billion, and a net income almost $15.7 billion. Like, that's a 3x from 2021. Not a 50% growth, a 3x growth. That's just insane. Anyways, I'm gonna give this a PE of 80 as the bull case, and we get a stock price of $393 with a market cap over $1.2 trillion. Sheesh, I mean, that's crazy. But let's go to the base case, 70 PE, all right? 70 PE. With that, we get 344 bucks per share. And let's get even bearish and give it a PE of 60, and that will give us a stock price of $295, which honestly, I don't see it being 60 PE by year end. It just doesn't make sense. But if it happens, if the macro environment is terrible and everything is just not getting better and things are getting worse, like inflation, for example, and interest rates needs to go higher than we all expect, then most likely we will see below $300 per share by year end, or from January 21st to April 20th of 2023. But I'm gonna go ahead and give the average of the base case and 344 with a 70 PE. I think that makes sense, and we're staying conservative too. Conservative on top of conservative. Jesus. Now, for my bears out there, if this is not bearish enough for you, well, it's your lucky day because we're gonna get even more bearish. You ready? Smash that like button, and I hope you get short squeezed. All right, let's go. Q3, let's bring it down to 370,000. All right, that's what I see a lot of analysts say they might do in Q3. So let's put that down, 370. With an 80 PE, we get a stock price of 306. Bring down the PE to even to 70, like we said here, 268 bucks per share. So pretty much what the price is right now, close to it. Okay. Let's keep it at that for now. Let's say in Q4, they don't do 468,000 vehicles delivered. They do, I don't know, 450. Let's see what goes down here. With the 70 PE, we get a stock price of 336. Let's go down to the bearish 60 PE, 288. And look at this, guys. Total deliveries for 2022 below 1.4 million, which I don't think that will happen. I think it'll be more than that. But looking at the bear case, this could happen. Even with that, with a 70 and 60 PE, which is highly unlikely that by year end it'll be 60 PE, but with this, we still get a stock price of $288 per share, which is still more than what it is now. Oh, wait, what's that? That's not bearish enough for you? All right, let's get even more bearish. For Q3, instead of 370,000, we're gonna say 350,000. Oh, with a 70 PE, we get a stock price of 263. I mean, again, it's still not too far away from what the price is now. Oh, what's that? 450,000 in Q4 is not possible? Okay, you're right. Let's go down to 420,000. All right, how is that? We're gonna go down pretty low here. Total vehicles over 1.3 million, a 43% growth year over year with a 60 PE, $277 per share. The same price what it is now. I just don't know what to say, guys. I mean, look, I'm looking at it in many different ways, and I'm trying to be realistic, guys, right? I'm not saying that the PE is gonna be 50 or 40 or 30 because that's just not gonna happen. In this decade, I don't see Tesla, being at a 30 PE. It's just not gonna happen. But I'm just trying to keep realistic as much as possible. And a 60 PE by year end is the lowest it could possibly go this year. And yet we still get the same price of what we are getting now. Mind blowing. I mean, this is crazy. This is the power of Tesla, man. The power of Tesla. All right, so quickly wrapping up, realistic price ranges, including the bear cases, is between $263 per share all the way to $393 per share. It's a massive range. My humble opinion, by year end, if things are okay, not the greatest, if they're okay, the stock price should be between 350 to 377. That's my humble prediction. I really think that this is the right number to be by year end. And what I'm talking about by year end is when Q4 closes. And we'll get that in the first 3 weeks or the first month or two of Q1 of 2023. So, bears, I hope you guys understand that going to zero is not possible and will not be possible. But what is possible is we do have more downside to come. And you know what? It's not just Tesla, guys. It's the entire market. You guys have to remember, the Fed doesn't care about the stock market. All they care about is inflation. They want to bring inflation down to normal, 2%, 3%, whatever normal is. And they will put us into a recession if they have to. It's their job. So we better hope that these interest rates that are being spiked up right now will bring down inflation. Otherwise, it's just gonna keep going higher and higher, and it's gonna, just bring down the stock market even lower and lower. It's just how the market works. It has nothing to do with the fundamentals of the business, especially Tesla that has no debt. Yes, I agree. People who have mortgages that's on a variable, they're gonna get hit the hardest. And maybe they have a Tesla or two on order that they may cancel because they can't pay it. But from my experience, from people that I know who has Teslas and are ordering Teslas, not only are they saving money from their previous gas car or vehicle, but they're saving money in every aspect. My friend who owns a Tesla is only paying $40 a month for the charging, while my other friend or me that's driving a gas car, because I'm in the Middle East, it's a whole lot cheaper here in the Middle East than it is in Canada, but over there it's about $400 a day. So you're saving 10x your money on gas alone, and you don't have any annual service fees, which is about $2,000-$3,000 saved right in your pocket. Your insurance is cheaper too because it's the most safest car out there. The only major payment that you have to pay off your Tesla is the monthly finance, and that comes to a maximum of maybe $800, maybe to $1,000 max. Remember, you are paying $300 to $400 a month just on gas alone, and you had the annual service fee. So when you do the math, having a Tesla is so much cheaper than having a gas car. It's a blessing. This recession will not only help Tesla grow even further, but it'll make Tesla stronger than ever. But you bears don't understand that. You bears think that, whoa, $50,000, $60,000 vehicle, recession, no one wants a vehicle. Nah. It's going down to zero. You guys gotta look at this in the long term. You guys gotta look at the way that I just presented to you through the expenses and daily usage. So really, it's a whole lot cheaper and smarter to switch to an EV, mainly a Tesla. But anywho, guys and bears, this is only a prediction and a prediction only. I'm not a financial advisor. I'm just a guy on YouTube who does his research before he invests. And I'm sharing that research with you guys. And if you guys are a Tesla bull like I am, who's going all in like I am, well, there's nothing to worry about. If anything, it's just a massive buying opportunity coming up. And yes, I did buy on Friday because it did hit my alert, my price alert on my phone. And I bought more, man. And I'll continue to buy more while the price is cheap, because By 2030, man, the stock price is going to the flippin' moon. If you guys haven't seen that video, check it out. You'll enjoy it. And that includes everything, not just the vehicle and FSD. So it's really interesting. Check it out. Don't forget to subscribe, guys, and I shall see you guys in the next video. See ya.